My experience as a tutor with over a decade worth of work is that many people look at joint arrangements, but then they are completely surprised when it gets tested. With this standard, we actually have two main questions. Number one is whether this is a joint arrangement. So this means that we need to see whether there is an arrangement where two or more parties have joint control. This means that first of all, it could be not two, but maybe three, maybe four parties. Even more, there could be several shareholders, but only several of them, not all of them, are going to be joint arrangers. So for example, if we are going to have a situation where we have one company that has 40% stake, 30% stake, 15%, 10 and 5, and let's say we are told that the decisions need to be taken, the major decisions, with 80% of votes, we would need to say that all three parties need to agree in order for the major decision to go through. So that smallest party is not a part of joint arrangement team, and those three parties are going to be joint arrangers, despite the fact that they have very different shares. So we will need to challenge who has to agree in order to make sure that the major decisions go through. Another important note to take that the right of veto does not mean that this party is needed for the decisions to be taken. No. The right of veto can just decline decisions, but it can't push its own decisions. And after we have challenged whether this is a joint arrangement or not, we will have question number two, whether it's a joint operation, so the parties have rights to assets and liabilities, or whether it's a joint venture. So for example, if me and you, we decide to make an event and I am going to bring, let's say, my saucepans and you are going to bring, let's say, your glasses for champagne or whatever, and we are going to just throw in some cash in order to buy ingredients for this wonderful evening, then this is going to be a joint operation. We won't have any entity. I will have rights to my saucepans, and you will have rights to your glasses, and we are going to pay for our share of expenses and get some incomes. So for example, I will pay for food, you are going to pay for beverages. This is a joint operation. And in here, there will be no consolidation. We will just put our assets, our liabilities, our share of income and our share of expense based on the agreement that is there. And the agreement can be quite confusing, like let's say 10% of revenue, 20% of cost, and so on. And there will be totally different situation where we have joint venture. Joint venture means that there are rights to net assets of the arrangement. So there has to be an entity. And yes, the decisions will be taken jointly because this is a joint arrangement. And in this very case, we may have different questions like how to account for that in individual financial statements, how to account for that in the consolidated financial statements. And in the consolidated financial statements, IFRS 11 says, I'm not going to repeat that, just go and look for IAS 28 requirements and account it the same way as you've done for associates. So, the two main questions, whether it's a joint arrangement, and then whether it's joint operation or joint venture. And we need to copy-paste pieces of scenario and comment on them. And this could be a separate question, sometimes worth 8 marks. And I will see you next. And if you want to have practice which is tailored to your exam, and if you want to have daily micro-learning sessions, then subscribe to my course, to my revision or platinum or enhanced tuition course, and let's pass SBR together. Bye.